Good morning, guys. Can everyone see the screens okay? Are the charts up there? And is the audio good? Okay, great. Thank you, guys. I appreciate it. So, looks like we have a bit of a gap down today. And so, coming in last night, my biggest concern for today, when I went back and looked at my notes through, if you looked into August and September of last year, when we had the Syria issue, was the biggest issue that was affecting trading was random news coming out from the State Department or the White House and just getting swept up or down. Really, the sweeps on average were 10 to 15 points when they would come out. 10 points was a pretty sweet spot. So I've done a couple of things today in my trade plan to make adjustments. First of all, I'm trading two-thirds of what I normally trade, and that is just to give myself a little bit of breathing room psychologically. I'm not changing my stops, but I am prepared to have a stop possibly get hit today and not let it throw me off my game plan. The other thing that I'm keenly aware of, if you go back and look at the times of reversals, that 9:30 to 10:30 a.m. spot was sweet, and the reversals were pretty damn big, meaning 10 to 15 points was not unusual back to the upside after we got a downside sweep. So be prepared for that. If after 9:30, look at your size of your rotations. If you're going to take a contra to wherever we are on the chart, whether it's up or down, all right, I would go and look somewhere between 10 and 15 points away from where we're trading, and that is where I would plan to take to look for a contra move. And I would definitely expand my 6-point rotation to a 7-point minimum rotation for taking a trade, depending on how aggressive you want to be. But the 10s, I think, are definitely going to be the sweet spot today. I expect the open to be really volatile. You're going to get a lot of marketed open bails and just from retail customers. And after that, we will see where it goes. I really think the whole just headlines coming out of Russia, and if any of y'all were with me back then, it was just pretty much all that dominated the news, and this is probably going to last for a couple of days. The net effect of Syria was net, we didn't do anything, and every time we didn't do anything, the market rebounded back up. Every time we threatened to do something in terms of getting involved militarily, the market tanked. That's pretty much was the formula that we went by back and forth, at least in the S&P market and the NASDAQ market. So I'll be looking for my normal trade plan in terms of I'm looking to take responsive trades. My assumption is there'll be responsive trades back to the upside as opposed to the downside after 9:30 in the morning. I'll be a little cautious in the first hour sticking anything other than 2 points and trailers, but I'd really rather operate after the first hour if I were conservative in nature. I'd rather let the first hour go knowing that that's the sweet spot for getting reversals. So let's look at the support levels just from a straightforward trading standpoint. I worked pretty hard on these both last night and this morning. And what you will see, okay, so a couple things I want to point out. First thing is, that is the ES. This zone right here, okay, may find responsive buyers in it, but it is weak. It's been traded through. The last time we were here, it traded through both sides without pausing, and that gives me pause in this support area. I will be taking a long out of initial support today, first time we get there. We're currently trading, it looks like, what is it, we're trading 40? 1840 and a quarter right now, which puts us right here. Okay, so I had to adjust. Last night I think I had the support at 33 to 35 or 33.5 to 35.5. I've adjusted that a little bit. There's an open gap right here. If I can get a so this area is going to be a little bit tricky. So, but this is what I'm looking for here as a possible setup. So, if I can get a 7 to 9 point rotation into this area, I will look to be a responsive buyer the first time. It has to work fast, but like I won't give it 25 minutes in this zone. It'll probably be, if I don't get my target within 10 minutes, I'm taking a trade here, I'm probably going to bail. The reason why, we're below Globex lows, but there is an open gap here that is generally an area where I would expect to find responsive buyers. I had to adjust this zone because of where Globex low is sitting. If we can get down to this 1834 area, I'll adjust this zone one more time. But right now, as it sits, Globex low was 1835.75. I was hoping it would fall down here. And so we have two zones back to back. But you'll notice I've left plenty of room in between the zones above. And so that'll produce hopefully fewer trades and better stretches, which is what the objective is there. Clearly, they're trying to hold it at this 1840 level, and there is a support level, but we've simply been trading through this area all night like this, and I have no desire to get involved in the middle of the overnight range where everyone will be duking it out. I'd rather be on the extremes of that overnight range rather than entering. Therefore, there's no zone here. Technically, 1840 to 42 has been a support level, but I've removed it from my chart. I won't be trading it today. So that being said, so let's go through the downside scenarios. So we open up 1840. Obviously, what we'd want to see for strength is test the Globex lows and responsive buyers step in, right? If we break Globex lows and come to this open gap, I'll take a long here. And what I'm hoping for is that we get back above the Globex low and we trap panic sellers down here, and then we can move to the other end of the range. The other end of the range is 1847, so it looks relatively close on the chart because of the scale that we have. That's a good 10-point trade to the other end of the range. If we can get above Globex high, that also coincides with Friday's low, right? If we can trap above, the next major area of resistance is going to be this 1854 to 1857.50. I gave it a little bit of breathing room on top. You'll notice that this zone is a little bit wider. Two reasons. I assume we're going to have a wider range today. My assume is we'll be back in that 20 to 30 point range. Secondly, the assumption is that it will be volatile right here. This is going to be key. Getting back over this 1855 is going to be a big deal for the bulls. If they don't, all this is a bounce, and then we'll see responsive sellers come in and possibly drive it lower. Okay, so again, I want to be clear with that scenario. I don't expect Globex low to break. I'm not shorting into Globex low, expecting it to go to open gap. But unless I get a fat rotation into Globex lows, I'm going to be shooting for this open gap right below. The intention is a break. It has to work relatively quickly or I'm gone. Next area is this 1828 to 1826. Again, part of the problem here with this is if we get responsive buyers or it pauses here at 1832, then the rotation down to 1828 is only 5 points. So I will most likely be playing this visually, and I'm not automatically taking a trade here. I will automatically take a trade at 1821 to 23. It's an area I'm willing to take a loss at. Same thing with 1817, 15, 1812 to 1809. So let's cover something that's going to be very important off the open. Clearly, we're gapping down, right? So what are the signs of an open drive lower, and what will be the signs that we're having a trend day down as opposed to a gap and go? So this is going to be one of the days where a tick extreme in the past, a tick extreme has indicated will open at negative, let's just say negative 1,000 on the NYSE tick. That symbol, at least on TradeStation, is $TICK. How will we know if we are getting a responsive buyers as we have the last couple of times that we've had an extreme negative tick out of the gate? Okay, so the bars will be green out of the gate almost immediately, and we'll have 3 bars up that look kind of like this, or one very large bar up followed by some stutter steps. Either way, this first bar will usually mark the low of the day. Okay, so wherever you position yourself, I have a few traders that trade this. If you're going to trade this, your stop needs to be right below that low of the day. I would not be looking to give it a lot of room below that. Okay, and then if I see this, right, I'm going to anticipate that we're going to open drive higher and move up. Remember, a lot of people, okay, so NASDAQ's been strong, and obviously we've been in a bull market. So making the assumption that we're going to stop, drop, and roll over straight down would be an aggressive assumption. Okay, so I'm not assuming that this is Armageddon and that everything's over, but I'm prepared for that possibility. That being said, extreme negative tick out of the gate, this is one possibility. Downside trend day down scenario, right? We open, right now we're trading 1842. The bars will be just the opposite of this. First bar will either be 3 down bars like this or 1 very large red bar. Okay, this does not mean that we will absolutely have a trend day down. I've seen them reverse out of this and go positive. So what are the signs on that? The first 5-minute bar will be the high of the day, right? We will not penetrate it. That's the first sign that we are having a trend day down, or at least a range extension down. The other sign, the rotations on both of these scenarios, right? Gap down with an open drive up or gap down, open drive down. The counter rotations will be extremely small. Generally speaking, they're usually 2 points or less. We can give it 3 points, 2.5 points today because of the additional volatility, but the rotations are small and they don't last very long. They kind of look like that, where there's just one quick snippet down, continuation up, okay, or inverse for trend day down. Tick will tend to stay below 0 for trend day down and above 0 for trend day up for the entire first hour. Doesn't always have to be the case, but is often the case, right? Let's see if I'm missing anything else on those scenarios. Okay, so let's talk about key points we've already talked about key locations of where I'd look for traps, right? Obviously the traps, again, I'll go over one more time on the downside. Breaking Globex low and recovering it. Recovering above Friday's low. So that even means in this scenario, right, that let's say we open this 1840, and as we can see, we have quite a bit of volatility already before the open. We open at 1840. If we open drive higher and we get above Friday's low and we're sitting here, my assumption is, unless we get back below Friday's low, is that everyone that sold last night is now trapped, and they're going to force it up into the white zone and possibly to the other end of the range. I'm not certain that we can get all the way back to Friday's highs today, quite frankly, with the uncertainty that's out there. But I keep it open as a possibility, right? The ranges have been 20 to 30 points. If we open 1840, we add 20 points. That puts us about 1860 right here. Now, the reason why I do not have a zone here and why I'm not using this as gap fill, 1860.50, I'm using the 1857.50. 1857.50 was the 315 futures close, and that is where they balanced the S&P 500 to the S&P 500 to the cash close of the cash index of the S&P 500. The 1860.50 was the close at 4:15 in the afternoon on Friday, and it was done on very light volume, and I do not use that as my gap fill. Other traders do. I do not. I don't find it reliable. Okay, very good. Wow, I may need to go to my backup computer today. That's not a good sign. Hold on one second here. And let's see if there's anything else that I am missing on the upside. So that is the assumption on the upside. On the downside, if we get above Friday's low, come up to the white zone, but then we get back below Globex high again, I will make the opposite assumption that these guys are trapped and that we have the potential to go to the other end of the range, Globex low. Remember, it doesn't look very far, but it's a 10-point range to the other side. Obviously, if we break Globex low on a second test or we get below the open gap, right, concern. Oh, one more note on this open gap here. If we come in, if we come into Globex lows and break relatively quickly and then get into open gap, I'm fine with the trade there. If the scenario is we open, come into Globex lows, get responsive buyers, and then come back up to, let's say, Globex highs, and then we come back down, the second time in, I'm going to be very cautious on this open gap. The reason why, there'll be a lot of pressure right above it that'll have built, and people will have expected us to trade back towards this 1855 area. And I think there'll be a lot of pressure here the second time. So this scenario where I take the open gap really that has to take place the first time down and not the second time down. I hope that makes sense, but I don't want to overcomplicate it. Again, regardless of which way we do that, first time into initial support and all these levels below, I will be looking to take long. I'll look to take longs to the upside. By the way, if you see us that we're in a trend day down, meaning we get this pattern right here, we drive down, up, and we start this pattern right here, okay? I'm probably tightening up my time in the zone if I see this to a maximum of 20 minutes as opposed to 25 minutes because I don't want to get swept. They tend to stay almost exactly 25 minutes on hard trend days down. And so I'm going to be watching my backside on this. Again, I'd rather control and have small losses or cut my trades to break even, right? I'm more concerned with protecting my capital in an environment like this than I am in necessarily capturing my profit. I want to take my shots where I can. So the other side of the scenario is that we have a trend day up, right? Which would be we open and we drive straight through and above Friday's low and get above Friday's low and hold, right? And that can even look like this, where we have a higher low and get back above. Okay, I would expect us to trade to the white zone if we can clear the white zone. Friday's high is a scenario. I don't see that happening, but I leave that as an option. And then look 20 to 30 points either way. If we open at this, just to give you an idea of where we could possibly be if we drive one way or the other. Okay, so how can those scenarios look? 1842 puts us right here. 1862 puts us approximately right here. And then, of course, 1872, that would put us roughly 30 points up. Okay, so if we drove straight up, that's where this would land us. It'd be pretty incredible, but anything's doable, right? On the downside, same scenario, right? 20 down from 1842 puts us right here in the sweet spot, which would be very nice. And then right below that, 1812, okay, with 1815, 1817 falling right in between. But I would mark the minus 20 and minus 30 from the open on your calendars, okay? And I wouldn't be so concerned today with where we are from the gap just because of the news that came out over the weekend. The other way you look at that is what if we split the difference and we just have a large balance range, and in which case you go 1842 and we would go 15 in either direction and just add 15 from the open and subtract 15 from the open. Those would be my two scenarios for looking for ranges. Either way, that would give us, a 20 to 30 point range up and down. And again, if you go back and look at Syria, a lot of these moves occurred like this. We trade up in the morning, some news would come out, it would whack us for 10 to 20 points, news would be out, and then we'd come all the way back painfully. If you got caught on the wrong side of one of these moves, it totally sucked. You're going to have discipline, right, and letting these trades stretch themselves out to take the contra trade. Okay, don't be too eager to short 5-point rotations. They will roll you in this environment, even if it's a strong, even if it's a point of initial support. Let me show you what I'm talking about on that. Let's say we're sitting here at 1828, 1826. News comes out of Russia, whatever it is. Someone defected, something happened, a bullet was fired, someone passed gas. Who knows? Doesn't matter. Okay, if we go down 5 on that, right, that's not a very big rotation relative to the news coming out. I want to let it go at least 10 points, right, maybe 15 before I consider taking the counter after news comes out. If you see a big bar in the middle of nowhere that goes whoosh like that, don't be too quick to counter trade it. Start counting. Give it 5 or 10 minutes to let it work itself out. Again, better to miss the trade than get run over. My entire focus is, for my coaching clients at least, is that you have more equity on Friday than you started with on Monday, and that's where I'm coming from. So that's really my trade plan for today. Big stretches, right? I'm looking for open drive higher and or open drive lower. I'm looking at the critical areas of Globex low and for traps, right? With hopefully we're going to test this open gap and then getting above Globex low to stretch us back over. And by the same token, I will take a short the first time into the white zone. When we're up here, we're opening at 1842.50. That makes Friday's low and Globex high higher risk trade. I'm not sure that I'll take a trade there this morning. Okay, but I will take a trade here. I will also take a trade at Friday's high back to the short side. and then I've been pretty clear where I'm willing to take a long on the downside. Does anyone have any questions for me? Let me see. Hold on a sec. Someone's hit me on Skype. Let me see if anyone has. Okay. Okay, got it. Nope, nothing there. And let me see if anyone has. Okay, and so let's do this real quick. I just want to pull up what my chart will look like in terms of a trend line coming in this morning. And I would suggest pretty simple. I would actually draw it to this point right here. And again, this occurred overnight. So you can draw both trend lines there. But this, just like that, this is what I'll be looking for in terms of the top of the range, which means the twin to that, right guys? I'm going to put that on there. Is going to be right there. That's that channel. So again, at Globex highs, we're banging. If we bang up against that, that'll be the top of that current channel. If I look, I'm going to copy this real quick so I don't mess up my own chart. And I go to a 15-minute chart. I see this right here as a possible okay. And that would put us as a possible backside test again at Globex highs. There's going to be some resistance here at Globex highs. There's no question. Getting above 1847 is going to be key. As you can see, this trend line actually, if you go back further, comes back quite a bit in terms of time. I haven't covered NQ, by the way. I need to cover that. Look to NQ to see the strength of the weakness, right? Right now we're down 32. Clients, I'll post up the NQ chart here in just a moment. But we want to see leadership out of NQ. If you see NQ hitting new day lows, right? And remember, NQ led us to the downside on Friday afternoon. I called that trap trade about 1 o'clock, at 1:30. NQ was hitting new lows, and it led ES to the downside. You got to keep an eye on NQ. It'll give you clues both to the upside and to the downside. I'll do my best to call those as I can through the course of the day. I'm cognizant of these channels that are sitting here. Again, they're just lines on a map. Doesn't mean jack other than that, but it does give me some clear vision as to where we might find support and resistance points. I'm trying to think if I oh, I know what I want to look at here. Okay. Overnight, again, I'm not trading necessarily off of the overnight ranges, but there's the channel that we're in right now. So obviously we want to clear above that top of that channel. So it's sitting something like that right now. And then obviously, so where are the points of the trap trade? Well, there's two areas that become important. That area, which is Friday's low, excuse me, Globex high, and this area right here, which is Friday's low, right? Obviously, that's going to be pretty damn important to get above. As I said, I expect if we can get above this point, this 1855 becomes a pretty clear area, 1854, 1855 for a potential target. So I'm not going to short. You know, obviously I'm not looking for shorts in front of that because I think eventually we'll get there if we can hold above these 2 points. In terms of looking at NQ, let's take a look at that really quick. How am I doing on time? 8:14. think I'm going to call that my extended range. It was tested on the backside, tested on the upside, and then it found responsive buyers right like that. So I think I'm going to call this. You can adjust it down just a hair, but I think I'm going to call this the extended trading range. As you can see, right up here, we'll be banging right against the top of that downtrend. So you want to watch that on NQ, right? If we jump right up and they get knocked down, obviously I'd also mark off on my chart just like I'm doing. I do have on my charts already set up, right? Globex high, Friday's low. These are trap areas that are critical, right? Also, I would look at where the close was on NQ. I forget at the moment. Actually, I can tell really fast. Let's see. 36.95.25 was the 315 close on this. So that puts us 36.95 and a quarter. That's the other obviously critical area, and you can see that lined right up from right into a support area, really from this 90 to 95 area acted as support prior to breaking down. This was breakdown, retest, so this is where your structure is. My coaching clients know what I'm talking about here. So that 36.90 to 36.95 on NQ, this is going to be a critical area. I'm not interested in doing much of anything right in between 36.90 and 36.80. Pretty much we'll have no trades in that area unless we set up a higher low there in the first hour. But again, I don't anticipate doing anything in that area. Pretty much same scenario. And then obviously we have Globex lows right down here. And I don't see higher highs or higher lows. I just see range up and down. So when you see this, by the way, when we're getting this, don't be surprised while everyone's working out if we just whip back and forth like this in the first 10 or 15 minutes trying to resolve this. But I don't want to step in the middle, and I definitely don't want to trade. I don't want to trade from here down to here. Okay, this whole thing is guess man's land. Guess if it's going up, guess if it's going down. Up here's good, down here's good, right? Obviously, if we break the highs and we start setting highs, you're going to be cognizant of that. So be aware of this channel, and then look where this channel is on the downside, right? If we break to the downside, as you can see, we get into this 36.30, and then remember the ranges have been 30 to 60 points on NQ. So 36.65, where we're trading right now, would be get 36.35 right about here, which puts us right in about here. 60 obviously puts us at 3600. I will take a long at 3600 on NQ. I'll probably put a bid, and I will keep my 10-point stop on that. I will be reducing size there, by the way, on NQ for increased volatility. I'll be trading half the size I normally trade all day today. But I will take a long at 3600, 3630, and I will take a short or shot at a short on NQ up here at this 3690 to 3695 with a 10-point stop up in this range if we get it. I'm not certain that we actually will, but we're pushing 1843 now. So anyways, guys, that's all I have. I've been promising to wrap up earlier and earlier, and I'm going to do that today. I don't expect it to be easy, but I do expect, I want to go over the key points of what I'm watching. No one day matters. No one trade matters, right? Two stops in the same index for me, meaning either the NASDAQ or the ES. Two stops finishes me in that index for the day, meaning if you trade ES, you take two stops back to back, even on reduced size. Put your hands in your pocket and go, I guess it wasn't my day. It doesn't matter. Think back to all the times y'all have drawn down big in your accounts, right? All you remember is the pain, not the upside potential anymore, right? And you go, that really sucks. Secondly, as my trading coach, Dr. Jeff, pointed out to me, when I'm taking a trade outside of the zones or outside of my trade plan, the question that I want to ask myself is, how much pain would I like to experience today? How much money would I like to lose? And so when you're taking a trade, right, and you feel like you have to react to something, or it's news, or you're going off course from whatever your set trade plan is for today, you can phrase that one of two ways. You can go with the Dr. Jeff style, which is how much pain do I want to have today? Or The other question from Andrew Menaker, giving credit where credit's due, which is, am I acting in my own best interest by taking this trade, or am I just making a knee-jerk reaction? Follow your rules. Respect your not only your if you're trading more than one index, your intraday stops as a whole, right? And remember that if it looks hard to you visually, you're looking at it and you're going, I'm uncomfortable with the rate the market's trading. It's okay to go, I'm going to go on a learning mission today and I'm going to watch what happens when news comes out. Because let's face it, how many times are we have to deal with news about war in Russia and have to figure out whether it matters or not over the course of the year, right? Just like with Syria, we figured out pretty quickly it didn't matter. We weren't going to do jack. There was going to be no soldiers on the ground. Once that got established, pretty much the upside was the easy side. My feeling, my gut is as soon as everyone figures out that we're not going to be involved with firing guns, missiles, or anything else at Russia, everyone's going to go, EU and US isn't going to do jack. Russia can take it if they want it, and we'll just wag our finger at them. Okay, right or wrong, I'm not discussing politics, but as soon as that happens and everyone figures that out, I'm pretty certain we'll be right back to the upside. The only critical thing from my research I did last night on Ukraine was that they have a gas pipeline that goes to Europe, and at the end of the day, people in the U.S. just don't give a damn about it. The market's been going up through every piece of crap news out there. Don't put too much weight on there. I mean, just go through your head what brought the market down last time. We've had budget impasses, government shutdowns, war in Syria, nukes from North Korea, right? And all those events, and then we had the EU crumbling, and in all those events, it didn't bring the market down, okay? So my guess is, not certain, my guess is this is going to pass just like all those other events did. And if I was going to try to position myself for a larger trade, guys, this is for my swing traders, right? I'm going to try to position from the long side up instead of from the short side down. I still think the short side, generally speaking, outside of the first hour, will be the harder side of the trade. Unless we get to the last hour and we've trend dayed down, right? Then it might be easy to the downside. But I'm talking over the next couple of days and weeks to come. I still think the long side is going to pay better. Tops generally don't happen over a day, then roll over. It tends to be a process, and that process tends to take 30 to 60 days minimum before we get any kind of significant moves to the downside. Doesn't have to be that way, but that's what's in my thinking. So I hope everyone has a great day. It's 8:22. I'm going to go do a little breathing exercise and get ready for today. Have a great one, guys.